I'm going to do a really quick overview of each individual indicator so that you can see exactly how these work. This first one is the box, and this is actually really good for those of you that are currently using AutoBox, which is the automated version of the box. And the reason why is because when there is not a lot of volatility, like we've had the last 2 days, which are technically holiday sessions. And what this means is that here in the United States, we have the Thanksgiving holiday. So today is Friday, the day after Thanksgiving. So today and yesterday, which was Thanksgiving Day, we have shortened trading sessions. So what typically happens is we usually have less volatility. Now the box loves volatility. And so what you have to do is you have to approach the market if you choose to trade these days with less expectation. And so what that means is you're taking less profit. It doesn't mean that you can't make trades. It just means that you have to understand that it's more probable than not that we'll have less volatility. That just means less movement. So if we look at these trades that happened on this tiny, tiny moving day, what we want to do is simply take less profit. So for me, I'm in Mountain Time Zone right now. Market opens about right here. So the first trade was right here, and we hit the first and second profit level. You need to take money where it gives it to you and get out. Same thing with this long, first and second profit level. And then these shorts were beautiful. I'm going to cover another indicator in a second that would have helped you with both of these trades. But this one, it goes all the way to the fifth profit level. And then this one goes 1, 2, and not quite to the third profit level. So beautiful trades, 100% winning trades, 1, 2, 3, 4, you're 4 for 4, wrap things up, go shopping. And by the way, if you've been following me the last 10 years or so, I use this same chart that I've used ever since then, 612 tick chart on the ES. Every chart's going to give different trades, but this shows consistency and the rules still apply. Okay, this indicator is called one price. It's a single price that populates about an hour and a half, actually not about, but an hour and a half before market open. So for me, that would be 6 a.m. So here's the new price level. Yesterday, it did not hit during the shortened session until Globex hit. And so that's why you have this line right here that you can see. I'll move my crosshairs. So what happens is on any day that this particular price is not hit, it continues until it does. And so we can see on today's price, well, first of all, yesterday's had some nice reaction off of it, so you could very well could have traded that. And then today's price, same thing. We had a nice bounce off of it, retest, and then a break, and then another retest, and then we went to the tick of yesterday's price. So extremely tradable level. And what's nice about this indicator is I've built in analytics. And what that means is that it shows you the statistical performance of this tool. So over the last year, actually a little bit longer than that, I have loaded here 259 levels, which covers a little bit more than an entire year. 97% of those prices, the market has come back to test that. And then it just gives you a breakdown, how many on a daily, if it took 1 day, 2 day, 3 days, etc. And you can change the mode by just coming down here and look at more of a percentage if you wanted to do that. Very useful tool. It's something that is not necessarily used every day, but there are more days than not where the market will react to this price that it is very worthwhile having in your arsenal of tools that you use to trade. This indicator is called Backfill, and Backfill is actually this little price right here. We only had one, and this is due to the lack of volatility. When the market's more volatile, we'll have a lot more of these prices form. Now, what's really awesome about this indicator is these vertical lines that you see. And in this case, they're all colored blue. And the reason why that is because what this signifies is buying pressure is building. So this is extremely useful no matter what style of trading that you prefer. You could technically ignore the backfill prices, which I personally wouldn't, but you could use these vertical bars, these lines that appear, to gauge areas that you want to look for buying. It's very simple. If we go all the way back to the left, we can see that we had buying pressure build up. What happened? We went up. We had buying pressure build up, not moving a lot. Again, we went up, more buying pressure, we bounce up, more buying pressure, small bounces, but again, low volatility. Buying pressure, we bounce up, buying pressure, we bounce up. And then here we have a nice run through Globex. Now we're coming down and we have more buying pressure. And this is today, again, Friday, shortened session. We have some nice pushing up during this period of time right here. This is on a 5-minute chart. So essentially the bottom line is this: if we have buying pressure, we're looking for buying opportunities. So whatever you're using, your own indicator, someone else's indicator, one of my indicators, we're looking to buy. So support, and then the reverse is also true when we have resistance, when we have selling pressure built up. So if I just scroll back, here would be an example of that. So we've got buying pressure that built up. We've got selling pressure. You can see through here, these are red. So when there's selling pressure, these bars will be red, the vertical bars. Here was a backfill price that filled here. Here's another one. So you can see this day there's more volatility and more backfill levels. These horizontal prices will form. Extremely, extremely useful tool to have regardless of what strategy you practice. You can use it and combine it with almost anything. This indicator is called key turns. It comes with a companion indicator called DOP, which stands for Directional Opportunity Predictor. And the reason why is because it's a predictive model that shows you more or less a tipping point, but it's not necessarily, or I should say, it's not always a price that is going to be traded at during the market. The way that this works is that if price is below, so here's the last 6 days on a 15-minute chart, if price is below this level, there is a great bias towards it dropping. If price is above it, like we see here, there's an incredible bias towards price going up. So it's very simple. Price is below us, we're looking for buying. Price is above us, or the key turns price specifically is above us, we're looking to sell, period. So in a lot of ways, it doesn't really matter what you're doing above or below these prices, because what we're looking to do is we're looking for selling opportunities all through here, and we can see the key turns levels is below price, and so we're looking for buying opportunities. Now, there's more technical details, but that's really the gist of it. We're looking for buying, period, ever since 3 days ago, where it was down here approximately 31.16. We've peaked at 55. So it doesn't really matter. This is very similar to backfill. In a lot of cases, it doesn't really matter what you're doing. What this does is it gives you that bias. Look, price is above the key turns level. I want to look for buying opportunities. Price is below it. I want to look for selling opportunities. End of story. This is the one indicator that governs nearly all of my trading, because my decisions on what I'm going to predominantly do that next day is based on this. And I've been using this for, 16 years maybe, every single day. Doesn't matter what market you put it on, it will work on any market, even stocks. Very useful tool. Okay, and this last one I'll show you, actually I'm going to show you prediction points after this, but indicator wise for NinjaTrader, and by the way, I do have a temporary prediction point indicator. I'll cover that in a second. But this one is trade balance, and this one, of course, it was made famous by Market Profile. My version of it includes analytics, and it'll take 10 minutes to go over the analytics, so I won't cover that here, but it basically shows you the probability of the nature of how the trade balance works. And so even if you're brand new to trading, all you need to understand is that there is an area of balance that the market will start with and then usually gravitate towards. And so there are very repetitive things that happen with the trade balance that, quite honestly, I don't know why every single trader in the world doesn't use this. This is something that should be a staple that everybody should have, because it is so habitual on how price reacts to this balance area that it just doesn't make sense not to use it. So even if you choose not to use mine, which I would highly recommend because it has analytics built into it, which actually took quite a bit of time to create, you should use it because you have one of my favorites, the fake, the initial fake, where price breaks above it only to come back. And this is because what drives this is institutional money. And they know that traders are going to trade breakouts. And so what they do is they fake you out and they pull it back and then they drive it. It happens almost every single time. We can see it through here. And then of course it runs. But remember, yesterday here and today are short sessions. So we're not going to have as big of plays. Now, there are other details that we can go into, but I'm not going to cover those here. But we have here, and I'll just wrap it up by saying this. This indicator is crucial if you expect or have intentions or goals, whatever, of trading long term. If you ignore the balance area, you're not just leaving money on the table, you're giving up profits that are relatively easy to take out of the market. And when you combine this with anything that I've shown you, whether that be the box or one price or the backfill areas, it just makes sense. It puts everything into perspective and the markets all of a sudden become not random. There's literal predictability with market movement. So speaking of predictability, the last thing I'll show you here is prediction points. Okay, so I'm actually going to show you this on TD Ameritrade's platform Thinkorswim. Reason why twofold. One, this is actually what I use for majority of my trading. Obviously with NinjaTrader indicators, that's going to be through there. But also a lot of my clients that have been using prediction points all the way back from 2007 when I created them, not all of them use NinjaTrader. So as you can see, they are highly reactive and very predictive to market movement. So this is actually 3 days. This darker area, this is the regular trading hours, and then the lighter gray shaded area, that is Globex or the overnight session. And the bottom line to prediction points is that what they do is they are specific price levels that quote unquote predict where the following day's trading session will have the greatest reactions, and as you can see, they basically nail it for the most part. You're going to have some overflow, you're going to have plenty of times where price goes to the tick, but if we look at that first day there, we have a 10-point gap. We just sit there all morning long for the first hour, actually longer than an hour, and then we run all the way to the end of the day to that purple line. And on my charts, I color them purple and orange. Other people will color them blue and orange. It doesn't really matter. The bottom line to these is that what will generally happen is price will go from one purple line to the next, and then they'll use the orange lines in the middle to get there. So essentially what we're doing is we're buying and selling off of these prices. And in a lot of ways, it's very similar to how we would use the key turns indicator, because if price is below a prediction point, and if it comes up to it, like we see here at this purple line, we're going to want to sell that. If price is above it, it comes down to a prediction point, we're going to want to buy that, period. Now, at some point, they're going to break, like we see here that happened in Globex. But as price works its way back up to it, there is most likely going to be resistance, and so we want to test that. We want to sell it. So it doesn't matter if it's like the last couple of days that we've had with this Thanksgiving holiday where the market's really not moving a ton, or if it's a Fed announcement, or if it's the real estate crash of 2008. It doesn't really matter what's happening. This uses a predictive model, and so it adjusts to market conditions. And so it doesn't matter what the market conditions are. This contracts and expands. The algorithm that I use to run these numbers contracts and expands based upon whatever's happening in the economy. So I did this video to show you how accurate and how powerful these tools are regardless of market conditions. I could go back 10 days and show you that, but I'd rather show you, how do these things perform when the market's not moving a lot, when we don't have a lot of volatility, well, as you can see, they perform extremely well. So then what it just comes down to as individual traders, and I know some of you manage funds, is how to use these tools to then produce results. Obviously, the objective of all traders is to make money. And so as you can see, shouldn't take a lot of time, but it will take repetition. And because nearly all of these, with the exception of one price, as we reviewed, not every single day the market will react to that price, but most days it will. But nearly all of these are useful on a daily basis, which is great because it allows us to practice every single day. And then what happens is through repetition, we get good at it. And that's what a lot of people like about these tools, is that because they are so repetitive, we can do the same thing day in and day out, and we don't have to wait a week or 2 weeks, etc., for the perfect storm to line up for an indicator to be useful. So anyways, that's a wrap. Grab these things while they're available at these discounted prices. There's a link in the email that you got. And if you're watching this on YouTube or Vimeo, just click the link below and get started.